What is going on, YouTube? I am Germ here. Today, as you guys can see up on the screen, I wanted to talk about Tusimple. This is a very interesting up-and-coming EV company. They actually IPO'd earlier in this year. I think it was around April. And if you look at the graph, things have been very interesting. They IPO'd around $40 before shooting all the way up to 71 on this graph, but the 52-week high is right about 80, so they almost doubled from their IPO. But since then, from those highs, we are down 58% as of today. So this has been a very volatile, very crazy company since it went public, since it's been on the stock market. And I'm sure people have made a lot of money. I'm sure people have lost a lot of money, but with all EV companies, there's so many people who are so hyped up, so excited, so thinking it's the future, that it kind of makes them be a little bit crazy. It kind of makes them overpay. It kind of makes them, get in with these super volatile stocks. And a lot of these people are the same people that bought up here or the same people that are selling down here. It's really crazy. So we'll be going over what I think about Tusimple in this video today, talking about some of the numbers and everything. So yeah, hopefully you guys do enjoy it. I would appreciate it so much if you did drop a like on it and subscribe to stay up to date on all my latest content. We're getting so close to 1,000 subscribers. I think we could hit it this week, but I think more likely we're going to hit 1,000 next week, hopefully, which would be super dope. And if you guys help, just click that button real quick, we can get there a little bit faster. You can help me out. That would be awesome. With that being said, here we go. So on the Tusimple website, tusimple.com, if you don't know about this company, they are claiming to be a new standard in safety. At Tusimple, they develop the world's most advanced self-driving technology specifically designed to meet the unique demands of heavy-duty trucks. As you can see here, we're talking about trucking. Through the development of an industry-leading autonomous driving system, purpose-built autonomous trucks with OEMs, Navistar and Traton, and the creation of Tusimple Autonomous Freight Network, we have become the partner of choice for shippers and carriers. Obviously, trucking is a massive industry, and if you can be the player in self-driving trucking and you can help get stuff all over the United States, all over the world with these trucks, and you can be the one doing it autonomously, there's a ton of money to be made there, and that is going to be very interesting. If you can do it quick, efficiently, safely, cost effectively, I mean, that is going to be an absolute home run of a business for whoever decides to do that. Now, there is probably going to be one, maybe a couple, multiple big players, and there's going to be a lot of people who try and fail. So while this is a good idea, while this, they are talking this up really well, and while it is an awesome idea, it doesn't mean we're necessarily there yet. It doesn't necessarily mean Tusimple is going to be the ones to do it. Now, there was a Yahoo Finance article about them talking about considering the long case for Tusimple, obviously a fairly new company on the public market. So people are saying, what does Tusimple look like? What is the future best case scenario for them? What valuation could be justified? How much money are we talking here? How big is this industry? So they do talk about it a little bit in this article. So they say for a company with simple in its name, there's been nothing easy or simple about the first couple of months of trading TSP. They started off trading fairly mildly. We took a look at that, a couple up and down moves. They popped more than 100%, but now they're down 50% from their peak. And a big part of why they're down so much is the company's quarter 2 earnings reports, which is what's scaring me a lot about this company and what's scaring a lot of other people as well. This is a big reason of how you go from, these 52-week highs or all-time highs of $80 down to where we sit right now is $29.77, and things just kind of keep getting worse. They're down 3% today, they're down 15% on the week, they're down 36% on the month. Like, this thing is really trading in the wrong direction. It is absolutely a falling knife, and I really do think that I for sure am going to be watching out and kind of staying away for now at least. But the company quarter 2 earning reports released about 2 weeks ago at this point, I think, made it clear to Main Street and Wall Street how much work is required to justify their present valuation of $7 billion. Right now, they're sitting at right about 6.25 billion, so they've fallen even from there, but still. Top line revenue came in at $260,000, which again, for a $7 billion company, for revenue to be $260,000, that's going to be hard to justify, which confirmed a drop of more than 80% to the same time period last year. It was also the guts of 800,000 less than what analysts were expecting. Big number down. A miss that was compounded by similar softness in bottom line EPS, which was unsurprisingly deep in the red. I mean, that is a big thing here. When we look at the numbers over here, this company, yes, revenue has increased over the last couple of years from $9,000 in 2018 to $1.84 million in 2020. But look at the earnings. They are continuing to lose more and more money, even while revenue is increasing. The kind of losses are increasing as well. Now, losses were less in quarter 2 of 2021 than quarter 1, but still they are very far away from profitability. Their revenue is not there, their profit is not there, and again, for the current $6-7 billion valuation, it is tough for a lot of investors to swallow. Tusimple showed strong progress in quarter 2 2021 by focusing on key initiatives that support their long-term plans to launch the first autonomous freight network that enables low-cost, safe, and reliable freight capacity. Again, that sounds awesome, but I want to see it a little bit more. Again, yes, if you get in before you see anything, before we have all the sale numbers, before you see what's going on, maybe you can hit that absolute home run. Maybe you can hit that grand slam, but there is also so much risk. Like, it depends what your risk reward tolerance is. The reward is super, super high if you are able to pick the company that's going to be a massive player in this. But the risk is huge too. I mean, right now the numbers don't justify really anything about this company. And the downside is just immense. I mean, who knows where this company could end up? Who knows how low it could go at this point? Because again, we're in a free fall right now. So we have definitely not reached the bottom just yet. Maybe it's soon. Maybe it's not. The long-term potential is still there. They do talk about, however, there are definitely some upsides. I'm not saying that there's not. I'm just saying it's very risky. As an investor, if you're confident in the inevitability of autonomous vehicles and trucks in particular, which I would say I definitely am. I think the automatic trucking is coming. I think it is going to be massive. Then a quarterly earnings report like this shouldn't really shake you, but all the same, it doesn't make for pretty reading, especially considering the level of hype that sent this stock, soaring. Again, if at this current valuation, we're at 6 billion, so we were at what, 12-15 billion back at the all-time highs. Like, that's pretty crazy. But all the same, it doesn't make for good reading. Until shares start trending back up, bulls will have to rely on the long-term conviction as well as positive sentiment from other people. Some of the analysts gave a price target of $55, which from current levels suggests there's some pretty appetizing upside in the range of 60%, even maybe even a little higher at this point. It just kind of depends what you believe. I mean, if you do believe in this company, if you love what they're doing, this is an awesome chance to buy the dip. This is way lower than IPO prices. You are 25% lower than IPO right now. So even if you weren't able to get in early or whatever, you're having another chance, you're having another opportunity. And even if you bought at the IPO, even if you bought at the very, very top right here, if you've been buying the dip all the way down, you've had chances to lower your cost basis, you've had chances to accumulate shares, and you're building up a nice position for the future. Like, yeah, it sucks to be down right now, but if you're investing for the long term, it shouldn't really matter. But man, I don't know. I think definitely if you start to dive into this company a little bit more, and just kind of take a look, see if you really do believe in this, see if you really do think this is the future. But yeah, kind of an interesting company, kind of an interesting opportunity. I think what they're doing sounds cool, but I don't really think the numbers are there right now. But that is pretty much it for this video today, guys. Definitely drop a like if you did enjoy it. I would appreciate it so much. Leave a comment down below letting me know what you think about TSP. I'd love to hear your guys' thoughts and opinions. Subscribe to stay up to date on all my latest content. Hopefully catch you guys in the next one. But until then, peace.